Hi, and welcome back to Financial Reactions. This series is the YieldMax 100 Share Challenge, where we have started with 100 shares of each of the YieldMax funds in groups A, B, C, and D starting in December of 2024. This video is payment 10 on Group B. So let's take a look at the overview. Group B overview. As you can see, there's 9 holdings. We have a total investment of $35,000 invested, and its current value is $29,745, which means it is negative $5,300. We are at a monthly total dividend of $1,281, which is, remember, monthly. These are 4 weeks, so the monthly's a little off. But this is all the dividend tracker. Won't do the 4-week thing. Here's the portfolio. PLTY is the largest holding, and MRNY is currently the smallest holding. As you can see, it's also very cheap. So our goal for the year was to be $24,000 in annual dividends, and we are 61% of the way there. As you can see, this is your monthly dividend payments, and we have January will be the month that you actually get 2 payments because of the 4-week cycle. So you get one at the beginning and one at the end. So let's take a look at the portfolio itself. And as you can see, we have BABAU is currently positive, as is GDXY. So those are the only 2 that are in the green on this. And this is done as average price, which is dollar cost averaging of reinvesting the dividends. And I've developed the spreadsheet so you can see it in a little different light. So we'll start with BABAU. And you can see on this it's 853 positive. That's because your initial investment is 1721 and the current value of 2574, which is where you get this. This doesn't dollar cost average. This is just current versus start. Here's your dividend payments. So if you added those all up, that's where you'd get the difference. We're at 153 shares, and this has only lost 38 cents since inception. So this one has been fairly steady. You can see it had a little spike, then it dropped, and it's been bouncing around a little bit. So this one has been fairly stable. The dividends have been from in the 40 range. We had this $1.91, which was an outlier, and the last 2 in the 70s. So that's really helped us keep up. 53.21 is our percent of initial investment. We have $951 received against our initial cost. This is with DRIP, so reinvesting the dividends. And if you took the dividends as cash payouts each payment cycle, these would be your payments, and you would have received 44.28% of your initial investment. DIPS is a little in the negative. It's $6.47 in share price, but only $3.31 in actual investment. As you can see, it's gone down. The dividends haven't offset the loss in NAV. We are at 149 shares, so we're almost 50% to doubling our shares. Last dividend, as you can see, we've had 17, 17, and 28. These are really small dividends for the last 4 cycles, and they're just, average before that. So this one hasn't really been a very exciting performer. FBY on this shows a little green. That's just because, like I said, we're a little positive in the total investment. But we have lost $2.94 in share price. This one you're going to get around the 60 to upper 50s to 70% cents in dividends against a $16 price. Let's see. You're up to 31.39. This one's a slow growth, but fairly steady in price. So as long as the NAV, if the NAV would recover, it'd be good. And 27.79. So this one's not major. Here's the gold, GDXY. This is the one that is green in the other system also. As you can see, it's positive 232 a share overall, and it's almost 956 current value versus initial investment. We're up to 143 shares, which is starting to grow pretty good. This one is steadily around the 60 to 70. And we've had a few lowers, but 60, 30, 80. So we'll call it 60. The dividend payment last one was 89.13, which gives us 651.50 in total dividends with DRIP, and 550 if you had taken these payouts. This one might be if you're trying to set up a way to pay bills, like or use as a debt accelerator. This one, which is green in both, it's holding its price and it's giving you steady returns. This would be a good one because you could take, say, $40 every 4 weeks and throw that at a bill. It would be a good way to start a debt snowball. Just an idea, which is one of the ways you can use this. But if you're doing this in a taxable account, don't forget you'll have some tax at the end of the year, so don't spend too much of the whole thing. You either hold it back, or you're going to have to plan on it in January, February, or March, holding back on the dividends. JPMO is a little positive in the investment, but it has lost $1.37. We're only up to 126 shares. This one's small payments, the 25 to 35 range. As you can see, it's only 24% return and 22% return. This one is not very exciting. MARO, this started a little later. You notice the initial price was higher than most of them. That's because these started at 50, and I think this was like a month or two into it, so it had went from 50 to 40, and now it's lost 21.92 overall. So you can see these new ones, when they start them, they tend to have a large NAV erosion. However, they pay some very high dividends, especially in the beginning. As you can see, it's starting to tick down, but we're at 194. We've almost doubled our shares in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this one is 10 payments, but it had higher starting. Yeah, so you doubled your shares, so it'll be interesting to see how these numbers go in the next year, because if it holds its price in the $15 to $18 range for the next year, this huge amount of shares you have might be able to help you out in your returns, because you can see we're at 54 and 41. So this one's, even with the loss, we've received half our initial investment in dividends already against a 21.92 loss in share price. MRNY is a little down. So you can see 334, but it's only 190 loss. This one's up to 180 shares. This one just has no NAV. Look at that, 512 to 178. This is another one of those. I'm not sure what YieldMax is going to do with it. I mean, can it get much lower? You're looking at a dividend of 7 cents, 9 cents, 20 cents. Look at the fall in dividends. So they're going to have to do something, either roll it, or they're going to have to either end the fund, or they're going to have to do a reverse split to get the NAV back up so they can get higher dividends. But you still have 180 shares, so you're getting $13 on a $1.78. That's not terrible. Of course, $7.57 a month is pretty weak, unless you're just trying to grow shares and hope that when they do the split, you can get a lot more shares. NVDY. Okay, this one is obviously, the NVIDIA has been up and down for the last year, so we are up to 173.5 shares, which is good. Unfortunately, It's lost 726 in share price. The NAV is not very good, but the overall value is up 510 from your initial investment to what you have in your account now. You can see we have had 60 cent and 70 cent and 80 cent, but then we get these $1.62, $1.61. So this one has the potential to do really high dividend payments, which is why you get the good growth even though the share price is not very good. We are halfway to recovering our investment in dividends and only 39%. This one was one of the more popular ones to begin with, so we'll have to see how this goes. And then the last one is PLTY. Look at this one. It's 198 shares, $5,267 over. You're at 12,588 against a 73.21 initial. Unfortunately, it has lost. Last month or last payment was better because we had this huge loss here from payment to payment, basically month to month. So that really hurt us in the overall numbers. I thought this one was going to hang on with this Palantir is doing so well in the stock market, but these just seem to, the NAV on these doesn't seem to keep up with the underlying, even though, look at that dividend too. The one before, this one is a massive one, it's $7.49, and then we had a $7 here, and then $5s up here. So you can see this one has some really wild swings. But your monthly payment is going to be good. This one was $465 with drip, and you still got $244, which is not a bad one. As you can see, if you started at 100 shares right now, it would be $63.49 versus the $73.21 we did. All right, so that's the last one in Group B. Group C, we can take a quick peek ahead, and I'll get this video out next. The only winner is CVNY. And that's one of the newer ones also. As you can see, it still has a higher price. So it's only down from 39 to 36. And it's up to 159 shares already. So that one's done really well. Who's the underperformer of the group? Coney? Yeah, look at that. Down to 648. So, however, its still current yield is over 100%. I mean, CVNY is only a 50% return, and yield on cost is 62. So this one has the highest current yield. So we'll have to see why that is in the next video. But I want to thank you for joining me. If you would do me a favor, hit the like and subscribe. It really helps me out. I'm new to this, and I'm really trying to keep this going. I'll probably end up going to year 2 on the YieldMax to see the long-term benefits or downfalls of them, because it doesn't look like 1 year is going to be enough. Sorry, you don't need sports. Alrighty, well, thank you so much, and y'all have a great day.